Today, folks, it is happening. The heart is sputtering. Earnings are here, and Tesla is kicking it off. And I think this stock chart into after hours directly represents what I think is going to happen with most big tech. It's going to be a lot of like this kind of arrhythmia that's going on with the heartbeat, and then it just flatlines because these tech stocks have rallied so damn much. And we knew that this earnings period is probably going to be underwhelming versus the stock prices that we've seen, because literally they keep stating that 7 companies have been pretty much driving the S&P. And I want to talk about these few companies and where I think the value and what can actually take the S&P into all-time highs, presuming tech stocks don't sell off miserably. If you haven't caught the earnings, maybe the webcast that's coming out at 5:30 might drive the stock. I'm just kind of reacting to this real-time news that's coming out. And from the earnings perspective, it wasn't like heart palpitating. Just taking a look at the revenue numbers, you got to take into consideration that the volume of sales is still growing. They're still leading in a lot of aspects, but because they've been lowering margins and price of their vehicles to keep the demand up, I'm not trying to be negative, but we can see this starting the flat line of automotive revenue. I mean, you take a look at energy generation, that's actually down quarter over quarter. Again, these year over year numbers look good, but they need to get up these new facilities, these new production facilities, and just start ramping some things up to actually start bringing that year over year back into this growth vector. Because again, we'll see what they talk about on self-driving and all that when we actually get into the earnings call. But again, revenues, right? Like year over year, 47% growth, that looks great, but on a quarter over quarter basis, it's looking a little bleak compared to say Q2 to Q3, where these jumps were pretty dramatic all in all. This is not a bad earnings. Everything in here is actually pretty great, in my opinion, for the market environment that we're currently sitting in, but it's not heart palpitating to the upside, right? Like we've seen the upside now. Look at Meta stock here. I think Meta's had its run here to the extreme at this point. People are momentum chasing, and the earnings are going to start proving that, this is probably becoming a little bit unjust. I was just joking today that when you looked at Meta versus Twitter, when we're talking about threads and how explosive this was off the gate, and then all of a sudden the users just died right down super quick. They're saying threads daily users are down 20% from Saturday, and users time spent down by 50%. And again, I think this explosive hype that came into it was a little exaggerated, and I don't even think Zuckerberg was expecting that. So this is probably more of the actual reality. I don't know if it's going to be able to compete with Twitter, because these social media realms have been around for so long. It's hard to make a new platform like TikTok that just takes off and keeps the user engagement up. So that is just what it is, right? I think, we're not in this crazy growth market like we were in 2021 from a revenue and, an earnings perspective. So I think earnings will be fine. I don't think we're going to see like crazy revenue drop or anything like that, but I just don't think that this rally is going to sustain past these earnings. I could be wrong. So where's the value coming in? Because I'm not going to see it coming from Apple. Again, just my opinion. I don't think we're going to see it coming out of Microsoft, even though we do have some positions, me and my fiance, within these kind of companies. I still believe in them wholeheartedly for the long term. I just think it's the lower half of the market that's going to start driving some value. So let's presume these stocks stop going to the moon. Let's say they start to flatline because earnings bring us back down to reality. What comes next? Well, if we take a look here, guys, I always just recommend going into the S&P 500 like VOO and just see what the top market cap weighted are, because if you remove those 7-10 companies that have been driving the growth, the PE multiples aren't actually that extreme on the S&P 500. I think somebody said if you add up all the lower half of the 480, 90 odd companies that sit on the S&P, that the actual combined PE value is apparently actually around 15 to 17, whereas the top weighted stocks are bringing the PE values to the freaking moon and back, especially when you got companies like Meta now trading at a 40 times multiple and Tesla trading at an 85 times multiple, right? Apple right now is at a 33, Microsoft sitting at a 38. These multiples are extreme. So where's the value? Where's the money going to go? As mentioned, the stocks that people have discarded that still are the largest companies in the US. They're not going anywhere. And Steve Eisman, again, making fun, saying banks aren't interesting. I think they are, and we're seeing that. Look at Bank of America coming up here. It's up 9.21%. The stock is rebounding. The PE is excessively low for being one of these massive conglomerate companies sitting on the S&P 500. There's a lot of value out there. I'm even seeing with companies like Home Depot that have been getting hit in the slower, environment. But even it has been shining a little bit here, rallying off the lows, which is nice. But these are the companies that I think people should be paying attention to. They pull in back dramatically from their all-time highs, and there's going to be some value in them. Look at Visa's up 6.6%. This stock's been on an incredible run, almost pushing back toward its all-time high. This one does trade at a premium, but these are the companies that are going to start getting some love now. I think after this, after this earnings, people are going to be like, okay, these tech stocks are crazy high now. Like, where are we going to take our profits and put that money? Where are we going to start to diversify? Because they want to lock in profits. Managers, all these huge fund managers, they want to show at the end of the year their clients their profits, and they're going to lock some of that in. That's going to be an inevitability. We'll see some of that happening here, I think, soon. And they're going to look for that next value play, and it's probably going to be in a lot of the financials. I mean, PayPal's starting to have its run, and these are the kind of companies that people are going to be looking to pick up, in my humble opinion. Honestly, you should always come back to the value, just cost average to the S&P, but I really think that presuming this money wants to stay in the market, and there's still large amounts of money market funds, people sitting in cash, bonds that are going to be coming up, people are going to have 6-12 months bonds that they're going to probably want to put in the market now that it's rallying back. They're going to start chasing, and they're going to look probably at the lower half of the market. They're going to want to get back into equities, and that could still continue to balance out the high tech growth and push us back to all-time highs. Obviously, that's not a prediction. It's impossible to predict the future of the market. I'm just speculating on what I see going on, and if that's something that interests you, as always, just my tidbit of advice, let me know what you think in that comment section below.